On the earnings call, an analyst asked if Nvidia expects to see revenue this year from those Blackwell systems, and Jensen said, we're going to see a lot of revenue from Blackwell.
Because half of this AI infrastructure market is brand new, we just don't know how big it's going to get and how long the growth cycle is going to last.
Hey everyone, welcome back to Chipstock Investor. Today we're going to be talking about what you've all been waiting for all week long is Nvidia earnings.
All week long, more like the last 3 months since the last Nvidia earnings update.
I guess that's true. Since we're not a breaking news channel, most of you have seen the numbers from Nvidia and they're absolutely fantastic as expected. But let's talk a little bit more about the nuances of the earnings call and those numbers and what that means as far as outlook goes.
Yeah, of course, we need to address data center, which is, as everyone knows, become like 80% of Nvidia's business these days. We keep showing you this chart to show where we're at in the different cycles of semiconductor end market demand. And so when we're talking about artificial intelligence infrastructure, in many ways, this is a new market. There's a whole new fleet of data centers being constructed. Total value of those expected to eventually be $1 trillion. But those are being built alongside the existing global fleet of data centers, which is already worth $1 trillion. Those are also getting a big refresh cycle using accelerated compute. So we're currently right in the middle of this uptrend for this part of the semiconductor market. It's massive. Of course, you've probably heard estimates like AMD that this is going to be worth $400 billion in annual sales by 2027. And frankly, we're not going to try to stick a number on what this is worth yet because we don't know. Because half of this AI infrastructure market is brand new, we just don't know how big it's going to get and how long the growth cycle is going to last. But we can say we are currently at max growth part of the cycle. And that was shown off in NVIDIA's April quarter, Q1 fiscal year 2025, the 3 months that ended in April.
I'd like to remind everyone, if you haven't already, make sure you're subscribed to the channel and have notifications enabled. That is a free and easy way to support us here at Chipstock Investor. If you're interested in a membership, that membership gets you access to our Discord channel. That access gets you things like our Chipstock Investor live Q&A that we had yesterday about Nvidia earnings. You can ask all your questions about companies like Nvidia or anything else. That membership is a great value at only $5 a month.
That's right. $5 a month, $60 a year. That's a Costco membership. And once we get you in the door, we're not going to ask for any more of your money.
Do we offer free samples? That's the benefit of Costco.
Sorry, no free samples. Actually, yeah, we do. Check out chipstockinvestor.com. We have a blog section where we really need to put more blog posts up. There's a free sampling of what is going on over on Discord.
All right, check it out in the description below. In our earnings preview of Nvidia, we talked about how the major clients are primarily cloud providers and large internet companies, which includes the companies that you see on the screen here, the other 6 in the Magnificent 7. And you also see we added Netflix. We feel like Netflix has also grown up and is a tech giant in its own right. But these companies have a ton of cash to play with. Now, all of that cash that these companies have on their balance sheet are ready to be deployed into things like accelerated compute and data center infrastructure. I think we can easily say that these companies have a proven track record of deploying that cash into things that really are a lot of value, that are a very good return on investment. This is a good example of why we can trust that these companies are spending on something that is of value, specifically on Nvidia. Let's take a look at these quarterly revenue numbers. We have the quarters dating back to Q2 fiscal year 2023, and you can see the absolutely explosive growth over the last few quarters.
Yeah, again, especially in data centers, NVIDIA getting a big tailwind, not just from the GPU themselves that do the AI numbers crunching, but also the networking hardware, also up 3x year over year. lots of stuff in the news about this. The Spectrum X platform, NVIDIA's CEO Jensen Huang said NVIDIA is all in on Ethernet. So that's causing a little bit of angst among investors in Arista Networks. We'll provide some updates on that later on, but we actually just did a video on what Ethernet is versus InfiniBand back in April. Check that out. But the big takeaway here for data centers, since this is what's really driving NVIDIA higher, is that it sounds like now Jensen and CFO Colette Kress think that they are fully booked beyond what they can supply their customers in data center compute and networking well into calendar year 2025. So fiscal year 2025, Q1 is what's listed here. Again, that's April 2024. So more than a year out. It looks like this growth spurt is going to continue to run higher. But Casey, we wanted to point out NVIDIA's traditional business, which is now in a distant second place to data center, gaming, video gaming.
Yes, gaming was actually up 18% year over year. All the way back in Q1 of 2023, that was the previous peak at 3.6 billion. It's definitely starting to climb back towards that.
Yeah, in Q1 fiscal 2023 is, of course, actually calendar year 2022, April 2022. At that time, we had estimated that GeForce Now, that's NVIDIA's video game subscription segment, think of it kind of like the Netflix of video games, was actually at about $1.2 billion a year in actual annual run rate revenue. We think that's probably a bit higher than that now at 1.5 billion a year. And we just plugged this in here because it underscores the fact that NVIDIA has a lot of software revenue lurking under the surface, unbeknownst to most investors. And I think NVIDIA is really incentivized to ramp up this more stable revenue stream like GeForce Now.
We fully expect that gaming will start to exceed 4 billion per quarter and make up an annualized revenue of around 20 billion, especially with the rebound in the PC market. And Jensen was also asked on the earnings call about NVIDIA possibly making CPUs. And while he was pretty coy in his answer, it certainly seems possible that NVIDIA is working on the CPU market.
Yeah, that wouldn't be great news for Intel or AMD. More competition coming on that front. Let's jump to automotive. This is an interesting bit, and this was a question that came up in our live Q&A session as well. What's amazing about this is that these automotive chips are actually not just still in growth mode, up 11% year over year. They're actually doing exactly the same thing that Qualcomm's automotive segment are doing. They're bucking the current industry trend. Automotive chips are in a downturn. We showed you that in the very first slide. Here's a peek at it one more time. All the way in the last row, auto and industrial chips, currently near some sort of bottom in their cycle. There's a lot of excess inventory right now that automotive customers are working through. But the interesting thing about Qualcomm and NVIDIA is Qualcomm has a very diversified business. They do connectivity chips and they address all tiers of an automaker's model lineup. So everything from premium down to budget. NVIDIA is currently anyways all in on the high-end advanced driver assist system market or self-driving cars. So this would seem to imply that they're actually picking up lots of market share at the expense of Intel's Mobileye. We had a brief update on that earlier this year. Big things happening here in this automotive segment. It's now a $1 billion per year revenue business, and we see this getting a lot bigger over the next 5 years.
Let's talk about this article from the Financial Times. They claim that Amazon changes their plans to order NVIDIA's super chip and await that new model, the Blackwell system. And the way I understood it, that's exactly what's happening. But I see not true written in red. So tell me a little bit more about that, Nick. Why does this not tell the complete story?
So this story actually came out a couple of days before NVIDIA's earnings, but Amazon itself actually came out and said that this article was not true. It is still installing previous generations of NVIDIA's chips into its data centers into AWS, Amazon Web Services, its cloud infrastructure. The kernel of truth at the heart of this, even though this is ultimately a misleading headline, is that Amazon is gearing up to purchase lots of those new Blackwell systems that Nvidia announced at GTC in March. So this is probably the story for all of the cloud infrastructure companies: Microsoft Azure, Google Cloud, Amazon AWS, of course, the longtime leader, Oracle Cloud, an upstart in this region of the IT world. Remember, early last year, we said that NVIDIA's tech has completely leveled the playing field in cloud infrastructure. Everybody is now in this race to install NVIDIA systems so that they don't get left behind. It's become a pretty good marketing strategy for a lot of these companies to onboard new clients if they say they have NVIDIA's latest and greatest technology. And if they don't, well, this is the problem with tech. We believe that there are very few true, actual competitive moats in the technology industry. It's really just this constant, never-ending race to keep up technologically so that you don't lose customers.
I know on the earnings call, an analyst asked if NVIDIA expects to see revenue this year from those Blackwell systems, and Jensen said, we're going to see a lot of revenue from Blackwell.
Yeah. So we'll get to the outlook on Q2 momentarily, because there was maybe a bit of reason for worry in that outlook. But let's maybe continue with this idea of the AI infrastructure build out. Another quote from Jensen. Again, I think we really need to start thinking about this as maybe being a multi-year growth market. There's going to be some cyclicality here at some point. But because this is a brand new market, specifically the AI training part of the market, it may not be identical to the cycle that the rest of the semiconductor industry is in. And we've already seen this play out, because most of the semiconductor market, consumer electronics, and now especially automotive and industrial, more legacy communications infrastructure, we've actually been in a bear market since the end of 2022. AI infrastructure has bucked that trend, again, because it's brand new. So are we still at the cusp of a new multi-year build out of these AI factories, of these data centers purpose-built to train AI systems? It remains to be seen. The way everybody is talking about it, including NVIDIA's customers, it certainly sounds like they are all planning on several years of elevated capital expenditures to buy these NVIDIA systems and fill up their data centers with them.
We've been talking about cloud data center. Let's shift our focus over to non-cloud enterprise spending within that data center segment. CFO Colette Kress talks specifically about AI infrastructure across the automotive industry. You can think about companies like Tesla or BYD. These companies are using equipment and infrastructure from NVIDIA to train their own AI algorithms. Kress said that they fully expect that the automotive portion will become the largest enterprise vertical within data center this year.
Yeah, this is an interesting comment, because we would actually expect long-term something like healthcare and pharmaceuticals to actually be the largest enterprise end market for NVIDIA chips. The automotive industry, interestingly, in spite of all of the media headlines stating to the contrary, very much gearing up for multiple areas of technological expansion. This is the one that NVIDIA addresses: self-driving and vehicle autonomy, more driver assist features, and so on. This is a massive market. And this is interesting, Casey, because it's separate from the automotive segment we highlighted earlier. So this revenue segment highlighted in yellow are just the chips that operate the driver assist functionality or the self-driving car functionality itself. What Colette Kress is mentioning is actually reported in data center. Tesla, for example, building out its Dojo supercomputer for AI training, that actually gets reported in data center revenue, not automotive revenue. So that's why this particular vertical for NVIDIA has become so large. But longer term, we think there's lots of other areas where NVIDIA is going to get positive traction, and healthcare and pharmaceuticals is just such a natural fit, because it's like 20% of the US GDP, many trillions of dollars a year in spending, right for some sort of disruption or cost cutting or whatever, that's where we actually see a lot of potential for Nvidia in the years to come.
One thing to note in the recent earnings report was that stock-based compensation, they spent over 1 billion in the 3 months ending in April 28th. You can see just last year they spent about 735 million in stock-based compensation, but they spent a ton in stock buybacks in this last quarter, 7.74 billion. Nvidia is well compensating its employees, but they are also taking very good care of their shareholders when you see buybacks like this. No worries there. Now, if you've been watching our Nvidia videos, you know that we've had a pretty conservative estimate for earnings for Nvidia, and they've continuously delivered much more than we have expected. This last quarter, 26 billion in revenue. Their next quarter, they expect 28 billion in revenue. But that is only an 8% increase sequentially, which is a significant slowdown, right, Nick?
Yeah, a very significant sequential slowdown. That actually, on an annualized basis, that's only 32% annualized growth. A couple of things here, though. As we already talked about, the Blackwell platform is coming the second half of this year. So most of the orders taking place right now, most of the revenue that is being realized right now is actually NVIDIA's previous generation accelerated compute platform, still selling lots of Hopper chips. So that could be part of the reason for this sequential slowdown. But then the second half of the year, as you said, Casey, Jensen said they expect to sell lots of Blackwell chips the second half of this year. We could see another acceleration in revenue. So I think it was time to update this. We had previously said that 100 billion in full year revenue was the absolute minimum baseline to justify where Nvidia is at. I think that needs to be bumped up to 125 billion based on the fact that they're probably going to, well, they just did 26 billion, 28 billion is the expectation for Q2. We could sail right through 30 billion per quarter the second half of this year. And then the operating income, they continue to crank out very high profit margins thanks to all of the research and development that has gone into this accelerated compute business over the previous decade. So we had previously said 50 to 60 billion in operating income. We need to bump that up to 65 billion as our new baseline bottom end estimate. Based on that, as of this recording, or if you're looking at the show notes, Nvidia trades for about 36 times enterprise value based on our expectations for operating income. Casey, Nvidia was your top stock pick at the start of this year, which has obviously been a good one. You're dragging the rest of the portfolio along with your pick, stating that this needs to remain our largest position. What are we doing? What are we doing next?
Right now, I am very happy that Nvidia is our largest position because it's dragging our portfolio upward. I don't want to get too high on this horse because you never know what could happen. But at this point, no plans to change anything for us. We're just holding steady with what we have. We're not adding, we're not selling. We're just keeping everything as it is currently. And we like it that way.
Now, this might be a good time to just briefly plug the video we did a couple months ago about when it might be time to sell Nvidia stock. We outlined a few reasons why you might be in that boat. We'll put a link to that video here. But Casey, I think at this particular stage of the game, AI infrastructure has been booming. That's what's propelled Nvidia higher. The big takeaway, I think, for us is there are a bunch of other semiconductor end markets that are now going to join the party the rest of this year, and it sounds like well into 2025. So we're comfortable letting this ride for now.
You can, of course, find all of our other picks in the semiconductor world in our YouTube videos, as well as over on our Discord channel. We have a channel dedicated to things that we are buying and selling in the investment world for our portfolio. Once again, you can get access to that subscription here on YouTube or over on our Ko-fi page. Make sure you subscribe to the channel and have your notifications enabled. We'll have much more coming your way. We have a video on Applied Materials post earnings coming up, as well as a update on Texas Instruments with a friend of ours from Investing Unscripted coming your way. Exciting stuff. We'll see you all again soon at Chipstock Investor.